Hello and welcome to Business Morning live on Channels Television. Well, it's the Christmas trading week. We just have about 3 trading days this week, and definitely we know investors is mostly going to be thin, according to analysts at this point. We're not expecting that much action, but who knows? Santa rally, investors are looking forward to that. But let's get to the top stories now. Starting with what's playing out. What played out with the markets last week, actually. We see it was a positive close, 0.92%. So definitely 89 trillion. That's what we had for the trading week last week. 1.67 trillion. That was added to the portfolio of investors. That's for that trading week last week. Market data shows that we see the capitalization was about 95.3 trillion for the previous week, reflecting stronger investor confidence in fundamentally sound stocks there. And definitely we also see it traded above the 152,000 points. That's last week. That's for the all-share index for the market. And definitely investors, they come up with that bullish pressure. It did start, Monday, Tuesday was flat, to start off the week. And, I'm sure, investors were getting a little jittery there, wondering what was going to happen for the trading week. But, from the Wednesday trade, everything just turned. I would now start seeing, positive closes. Then, we'll see about over 1% rise for the market. That's throughout last week. So that should give us some kind of direction on what to expect this week. We might get that Santa rally with the way it's looking. But let's get a check now on what played out with the global oil market. That's today. We know for last week they were down about 2%. That's for Brent crude and WTI. But we're starting off strong this morning, 1.04%. For Brent crude, $61.10 a barrel. Still that range trade there. WTI crude, $57.13 a barrel. A bigger 1.08% uptick there. I think I'm getting used to this starts, for the week now for the oil market. Sometimes Mondays kick off quite strong. Then, throughout the week, then you start seeing the sell pressure there. But, yeah, still range trade. We might see a bounce again. Brent crude did fall below the $60 level, but quickly recovered back that level, now trading above $60. See, it's still geopolitics driving sentiment right there in the oil market. We'll see how this holiday shortened week will look for oil markets. All right, to other stories now from the regulators. We see the Securities and Exchange Commission, they've announced the capital market operators will renew their registration between January 1st and 31st, 2026, as part of ongoing efforts to modernize regulation in Nigeria's capital market. The Commission also disclosed plans to commence electronic receipt and processing of registration applications in the first quarter of 2026. And this is aimed at speeding up approvals and reducing manual procedures right there. Speaking in Abuja, SEC Director General Dr. Omotimi Agama said the move reflects the Commission's commitment to faster, more transparent and technology-driven regulatory processes, adding the digital automation, improved supervision tools, and stronger IT infrastructure will enhance investor confidence and market stability. And, don't forget, quite an incredible year for Nigeria's capital market. We did kick off T+2 trading, and that's been ongoing for now. And we'll see if, that continues and how investors continue to react to that in 2026. So those 2 working days to get your trades settled there. All right, to other matters now that have to do with consumers. The Federal Competition and Consumer Protection Commission, they issued a warning to intercity road transport operators, urging them to avoid arbitrary or unexplained fare hikes during the ongoing Yuletide travel season. The move follows a surge in consumer complaints across the country, even as fuel prices have eased. In several regions. FCCPC Executive Vice Chairman, Mr. Tunji Bello, stressed that while fare adjustments are allowed, they must be transparent, fairly communicated, and not exploitative. The Commission says it is actively monitoring market conduct, engaging with transport unions and park managers, and will take regulatory action against operators who exploit seasonal demand or engage in unfair pricing practices. Definitely we still have profiteering as a big issue when it comes to most markets at this point. And, the consumer has been through a lot in 2025. Let's give the consumer some peace in this Yuletide season. All right, definitely on Friday was the budget presentation there, and as President Bola Tinubu presented the budget on Friday, we see, reactions already coming in from key stakeholders. We see Mukhtar Mohammed speaking on capital market. He described the budget's assumptions as realistic, but emphasized that funds must be deployed transparently to achieve the intended results. Analysts like Mohammed stressed that while the spending plan is ambitious, the government's ability to prioritize, track, and account for allocations will determine whether the budget translates into real economic impact for Nigerians. Take a listen.
A lot of issues that are ongoing. But when you look at the budget, I think 1,400 exchange rate is quite conservative. At least we have gone from the previous one of 1,000 naira exchange rate of 2025, which we never did. Now, so we are getting at 1,400. I think that is conservative. That is still fine, even if we are going between 1,460, 1,000, maybe sometime even 1,500. I think that is conservative, and that's good. Oil price is not conservative at all, 64. Because, $64 per barrel. Remember, from $75 per barrel, we didn't even achieve it, and now we are doing $64 per barrel. We don't seem to learn. Because what should happen, we should be looking at oil price between $56, $58. If possibly, to be very in a safe side, we should be looking at $55 per barrel. Remember that 2 weeks ago when that blockage came from Donald Trump in terms of Venezuela, you saw that oil price came down as low as $54 per barrel. So you can keep doing same thing and you think you have a different result. Oil production at 1.88 million barrels per day. I think that's conservative compared to 2025, where we had 2.1 million barrels per day. So if you look at what we achieved in 2025 with condensers and others, we were able to get to 1.8. Even if OPEC keep telling us we only did 1.1, the highest we did was 1.5. So, and definitely that is achievable. So there are some achievable goals, but again, we will question. We need to begin to to bring clarity in your budget planning. Infrastructure, 3.56 trillion. Which sector? Which route? Which? We need to know. You need to try. Don't just give us figures like this. I think that's where my greatest challenge is when they talk about, even in cost of borrowing, they say you're borrowing for infrastructure. Which infrastructure? Tie it, so that we can ask questions. That you got so X, Y amount budgeted for this route. Why is this route not being made? So that are things that we need. Don't just tell us infrastructure. It has become a conduit pipe now. Everybody talk about infrastructure. Buhari talked about building one of the best large infrastructure, and President Tinubu now is building infrastructure everywhere. But again, in terms of infrastructure, what are we really doing?
All right, definitely a lot to unpack there with the budget, and definitely we know investors, analysts watching out for what's going to play out in 2026 at this point. But now let's pivot to festivities at this point. We see the final quarter of the year is the busiest period for Nigeria's catering and event industry, from Christmas celebrations and weddings to corporate end-of-year parties. December often determines whether catering businesses close the year in profit or loss. And we explore, how Christmas events, weddings, corporate end-of-year culture, and that drives revenue, shapes of food demand, and tests the capacity, staffing, and logistics of catering business during the festive rush. Joining me for this conversation, Modupe Emmanuel, MD and head chef at Salt Lagos. Salt Lagos is a fast-growing culinary company. Right there. She's right here in the studio with me. Great to have you. Good morning.
Thank you. Great to be here.
Fantastic. So definitely, I love cake. And I know a lot of people, love cake. And, this is time to forget about your fit fam goals and all of that and just, indulge as much as possible. Eat all kinds of cakes, at this point.
Yeah.
But, when I have, MDs and CEOs here with me, I'd like to ask them this question first. Doing business in Nigeria in 2025, tell me what keeps you up at night and what helps you sleep looking at doing business in a country?
Thank you for having me. What keeps me up at night doing business in Nigeria? So many things. There are very unpredictable factors. For instance, electricity is something that, keeps me up with the cost.
Right.
and the instability sometimes, but we manage to work around it. Traffic is another thing for us that we do cakes and sometimes have to deliver. If we don't plan ourselves properly, we find that there can be issues maybe with delays. Some of the things that I have to do is just keep thinking about planning and ensuring that I do what is necessary to ensure that my customers are satisfied. And what makes me sleep at night, I think, is just the passion. And also understanding that, yes, we might have hiccups in Nigeria, but Nigeria is also such an amazing place to run a business. It comes with its hiccups, but it's also a place where you can thrive in business. So, yeah.
Yeah, quite interesting. When we talk about, logistics,
Yeah.
when you're trying to order a cake, most of the time, let's imagine the cake costs maybe 70,000 naira, and delivery, they get as high as 25,000.
Yes.
To deliver that cake.
Yes, that happened to us actually last week where we had to deliver a cake. We normally have designated drivers, but in this instance, we didn't have one, so we needed to use an Uber. And by the time it got to the destination, it cost us 32,000 naira.
32,000 naira to deliver a cake that costs...
I don't even remember the cost, but more or less the profit is gone if you think about it, because you've used bulk of that sum, because I couldn't take the cost from the client anymore because she had paid the cost for her delivery. But those are some of the challenges that you face, and you win some, you lose some, I guess.
Win some, lose some.
Yeah.
Quite incredible, But, looking at all the quarters, at this point, there's something about Q4.
Oh, yeah.
And I'm guessing that's the time you cash out. Is it?
I mean, it just depends on how you look at it.
Okay.
Q4 is a busy season.
Right.
Cash out, yes, but at the same time, you're putting in a lot of work. So there, like I said earlier, it's the pros and cons to these things. In coach, you cash out, but you're also churning out. You're not cashing out of sleep because you're losing sleep. You're working almost like 24 hours a day. So if you're getting any form of sleep, maybe 2 to 3 hours. My team, for instance, I was talking to them this morning before I came, and I'm like, so what time did you guys go to bed? Some of them went to bed at 3 a.m. and they're up and we're working. That's just because festive season, Q4, is a busy season. It's the season where everybody tends to unwind. You have the parties that are happening. We have the Dirty December.
Right.
So that's just the time for people to relax and spend time with loved ones and family.
Yeah, quite interesting. It's been described as make or break for caterers. That's Q4. So what do you have to put into this period to actually, make it work?
Planning. You have to plan a lot. So, for instance, there's a particular thing that we do yearly, like we do a box of desserts. And I've been planning that since last year, January. I got the first prototype of my box in July. Wow. And so it's something that you have to plan because you can never predict what can happen. Something can go wrong along the process, So you have to plan for staff. You need to make sure that capacity building is very important so that you know that you can handle some of these things. And I think you must also be able to say no where you need to. Because sometimes, it seems like, okay, there'll be an influx. But I also believe that if you know that really I can't handle this, it's better for you to say no so that it doesn't become the thing that breaks you, because you said it's like the time that makes or breaks catering businesses. So the ability to say no is also quite important.
And I'm wondering how much orders would make you have to start saying no.
I think that
to some customers.
You look at the capacity of your team and you look at what you can really handle. Because if, for instance, let's say, just saying, if people want like maybe you to handle 12 events in a day, are you able to actually handle that 12? Or do you know that you can handle 6 or 8 and you execute it excellently well? So it's better for you to say no and execute what you have excellently than for you to say yes to everything and then you mess up. So that's my own take.
Right. So how do you handle it? Do you have to oversee every cake, being made?
No. So
how does it work?
So I have different people. I have heads of departments. I have someone in charge of I have people in charge of baking. I have people in charge of decorating. I have people in charge of customer service. So you just have like someone in charge of operations, HR. So I'm not in the nitty-gritty. If I'm in the nitty-gritty of everything, then we can't grow as a business. And then you are not able to actually do the 8 or 12 events, because that means that I have to be at every event, and that is not sustainable. So I think it's about training your team, making them understand, okay, this is the season we're going into, and you begin to train people. And we also found that there's some people that you didn't even think would be able to handle some things, but when you throw them in the deep end in this season, you will be amazed at how amazing they are at handling things. So I've been very blessed with my team, and they execute excellently well. So yeah.
That's quite incredible, because we try to gauge the consumer. We try to gauge demand for business. And if we go back to maybe when the naira was about maybe 300 or so,
I remember,
to the dollar, it's so fresh in my mind. I can't get used to this exchange rate at this point, even though I report it every time. There's been notable price changes.
Yeah.
When it comes to, cakes.
Yes.
Let's say around that time, the average cake for maybe a wedding, how much would it cost, back then, for a niche cake?
I mean, you could look at like 250,000.
250,000.
Yeah,
right.
Yeah. So at that time, when the exchange rate was still excellent.
Right.
But obviously, prices are extremely. And I think, to be honest, we need to be a bit. I understand the way Nigeria is going, but I also think that we need to show Nigeria a bit of grace, because it's not a Nigerian thing. So I give an example of like chocolate, which is something that we work with a lot. The prices of chocolate worldwide has gone up significantly. In fact, we in Nigeria were still benefiting because the prices were not as high, but I think it was just a few months ago, we're told that the prices have gone up by 55%. So you can imagine, between maybe like August and all of a sudden in October, you're being told that chocolate is 50. How do you balance that, So, yeah, I think it's a general world problem, honestly.
Right. And I guess the farmers, they have it good, the cocoa farmers. Some of them.
Some.
At this point that export, cocoa, because those other big, African producers, they've made good money, from exporting commodities that have risen in price, but when you now convert it to chocolate, then the consumer now has to suffer, and you also have to find a way.
Yeah, but the good thing is, for instance, there's a local brand that actually produces chocolate, for instance, and they do excellently well in what they're doing. So we can, apart from using the imported ones, we also support and use a locally made chocolate, and the quality is very, very good. So,
So quite interesting. So you're having some inputs you don't have to import.
Yeah. So as much as possible, we try to use whatever we can source locally, because even in the the food industry, so many amazing things are happening. We have farmers in Jos that we buy our strawberries from, that we buy our passion fruit from. So there are some fruits that normally you would have to import, but no, we don't. We just get our suppliers from Jos, and they supply us in good condition. So, I mean, we just bought passion fruit like last week, and it's all coming from Jos. So, as much as possible, where we can, we try to source locally. Even our flour, we use locally made flour, and the quality is very good.
So which inputs do you have to import? Like you have to
Dairy. Oh, butter. We have to import butter. We have to import cream. Some milk, maybe not all, but some. So it just depends on the brand I choose to use. But dairy, for sure, is something that we have to import.
Right. I know Nigeria struggled with producing milk.
Yeah, and butter especially.
And butter.
Yeah.
Right, I understand. I tried to buy butter recently. It cost a lot.
It is a lot of money. It's like gold.
Wow.
Yeah.
That's incredible.
Yeah.
So how do you manage to absorb, some of these costs and not pass it on to us, or you just pass it on?
No, we don't. We try not to pass everything on to the consumer. We just find a good balance. So some cakes can be maybe quite expensive, and some might not be as expensive. So the expensive ones, we just try and like do a balance and say, okay, is this worth? This is too expensive. We can't put too much on the customer. Some we don't even make that much profit from, but I just do it because, for instance, I just particularly love that product, and I want somebody to try it. So we balance it nicely.
Fantastic. We'd love to see more balancing at this point. But yeah, I saw some data, recently from the US. They love to gauge the health, of the consumer.
Yeah.
There's so much data, around the consumer in the US. And what I've seen is it's the high-income consumers that are driving demand in the US at this point. Would you say that's the same thing happening here? Is it the high-income individuals that are buying the cakes at this point?
I think, well, for us, I think that we have, some people might say yes, it's the high-income consumers, and relatively so because our cakes are not cheap. And they are not cheap because we have to use the best products and the best ingredients, so we don't try to compromise on anything. But at the same time, we also try to like find, again, as I spoke about balance, some that are not as expensive. So maybe trying to make it smaller in size so that it's easily affordable. Maybe someone doesn't want to eat like a whole cake and they just want to have maybe like a loaf or something. So we've looked for ways to try and ensure that we can, if someone wants to eat maybe a salt cake, you can, I guess, again, affordability is relative.
It's relative, right.
So, they can afford to.
Fantastic. So, definitely looking into 2026, 2025, we've had a stable currency.
Yeah.
Not so much strength, but it's been stable.
Yeah.
We also have, some other macros, working in our favor. When we look at inflation, that's been trending downward to most of 2025. So what are you seeing for price of cakes in 2026? Are we still seeing that, stability, or do you see prices going up?
Again, I think it will depend on, and that's why I said it's not just a Nigeria thing.
Right.
So going back to that example of chocolate, if chocolate is expensive, it's not a factor of the dollar or the naira. It's a factor of the fact that chocolate's price has gone up. So if the prices of butter goes up somewhere else, when we bring it in, it's going to go up. So I don't really think it will just all depend on the cost of ingredients. And again, maybe like the cost of electricity, because for instance, the prices we were paying last year, and now this year it's like black and white, Right. So everything depends on the external factors based off of ingredients, the overhead costs. People also want salary increase, so
yeah.
Exactly.
We want a lot of things.
So we have to look at all of those factors.
Right. Yeah. We have the Fit Farm community. They're trying to, get that buddy, for next year. Do you think you're working against that community with your cake tasting so good?
I don't think so, because I have a lot of Fit Farm people. Okay. But again, it's about their discipline. So right. I have people who tell me, well, I know I'm going to eat salt at a party today, or I'm going to eat a salt cake, so I'm not eating all day just so that I can enjoy my cake.
You save yourself.
Yeah, and for instance, my brother, he is a Fit Farm junkie. Like, he exercises every day. So if he's going to eat cake, he saves it to like the weekend, unless he's really stressed, and then that's when he goes into my fridge. But like usually he would just save it for the weekend. So when I'm testing things out and I'm like, oh, please come and test, it's like, no, I don't want to test you. You're ruining my
I can be a guinea pig. I can taste, for you.
Sure, I know.
I have the capacity, for that. Thank you so much. It was great having this conversation with you, Modupe Emmanuel, MD, Head Chef at Salt Lagos.
Yeah,
thank you for coming out today.
Thank you so much for having me.
Fantastic.
Thank you.
All right, we'll take a break now. When we come back, we have more conversations. We're looking at ports and how to make our ports more effective. That's in a moment. Just stay with us. Well, the Anambra State Internal Revenue Service, AIRS, has convened its maiden tax summit in Awka, the Anambra State capital, to educate residents and the wider Nigerian public about the new tax law passed by the National Assembly, scheduled to take effect in 2026. According to the chairman of AIRS, Dr. Greg Ezelo, the summit also intends to promote understanding and compliance with the law, addressing concerns and misconceptions surrounding the new tax regime, as well as provide opportunity for information and updates for citizens. Take a listen.
Subnationals are gearing up for the new tax regime, which begins on January the 1st, 2026. For Anambra State, the maiden Internal Revenue Service Tax Summit has been organized to enlighten every taxpayer on what they should know and do concerning the tax law.
These reforms were designed to enhance transparency, broaden compliance, and support economic growth. Their success depends on shared responsibility.
It's equally apt to say that tax monetization in Nigeria begins and ends with the NT 2025, instilling discipline, sanity, order, national and subnational cooperation and integration, and even prosperity to both the taxing authorities and taxpayers at large. This expectedly will sound the death knell for desperate known and unknown non-state actors across the country. Let me sound it loud and clear that the punitiveness of the laws in place, both at the national and subnational levels, has no mercy for these set of individuals.
It is not your money.
Presenting a paper on the provisions of the new tax law, a tax expert, Mr. Chijioke Uwaegute, highlights exemptions for individuals and businesses earning between 800,000 and 1.3 million naira after deductions, as well as exemptions of companies earning 50 million to 100 million naira after deductions.
They are not in any way trying to increase the taxes. A lot of people, a lot of stories are going around that government is trying to increase tax. No. Government is trying to do what? Create avenues to expand the tax net.
The AIRS discloses that there will be technology deployment to ensure compliance, particularly in the informal sector.
All right, now to our next conversation. Nigerian ports are central to how goods move, prices are formed, and businesses survive. Yet congestion, delays, and high costs continue to define, the port experience, for many importers and exporters. And we're taking a practical, inside look at how leadership and strategy can unlock Nigeria's port economy. My guest is Mr. Sylvester Igede, is a former port manager of Tinkan Island Port and recently retired assistant general manager and the managing director's office. With years of hands-on experience in managing, one of Nigeria's busiest ports, he joins us to talk about, what's really going on and what needs to change to make our ports more effective. It's great to have you on the show, sir. Good morning.
Yes.
And compliments of the season.
Thank you. Thank you for having me on this program.
Yes, and we know this is the Yuletide, season at this point, and I'm wondering if there's anything, anything peculiar, about ports, during this season. Do we see maybe high demand or high, inflows? What's it like normally this season?
First of all, let's define the port.
Right.
The port is a maritime harbor for loading and unloading of cargo, and it's a location designated for customs and immigrations. Hence, it is called a gateway to the Nigerian economy. That's the reason why it's called the gateway. So usually this period, this is a dry season period, we're supposed to have more exports.
Okay. Because
this present government, thanks to the new initiative that we have export terminals established to encourage exports, to at least to standardize exports. And when Nigerians are supposed to cash in on that, so that when our exports go out, we don't have some kind of, governments outside this country accepting or not accepting our
Because when we import so much, we're creating jobs in other countries, giving them all that good foreign exchange.
So we are asking Nigerians to leverage on the export processing terminals which have been established. In that place, export process, we have standardization of export before the goods can go out, so that 90 to 95% of the goods exported out of this country can be accepted, and then we can have more foreign exchange. And
because I can imagine with your experience on the ground, I'm sure you know what those buyers abroad want to see, when it comes to, goods coming into their country. Would you say you've seen some kind of improvement?
Yes, there's a great improvement because Nigerian ports had that initiative to, have these export terminals so that we can have the standardized agencies who will look at this product and say, okay, this goods can go, this cannot go. So in the export terminals, various export terminals we have, which were established, about 5 of them, we have the customs, we have the agencies who look at what can go and what cannot go. And so if your export is going out from Nigeria, it's sure good to go before we can allow it to go. Right. So this is a very good initiative, which, of course, has been on for a long time. And then with the clearance of the congestion, the port congestion, around the port corridor, it's been a gridlock. With the clearance recently, which, of course, I did as the Pinkan pilot port manager as at that time, in conjunction with Lagos State, and the whole place is free now. So vehicles can go in and out more freely, unlike before. So most exporters are now encouraged to bring in their goods. Now the only thing that we need to do is, of course, during that time, we had an increase in export, which was about 30%, which increased to about 80%. I know the ports handle 80% of gross domestic product of Nigeria. So all we need to do right now is encourage farmers, because government has also leveraged, we have also leveraged on the fact that government is encouraging export. So there are some incentives created for those that want to export. So if farmers can leverage on that and then bring more exports into the port, then we'll have more foreign exchange.
All right, I'm talking about farmers at this point. Let's imagine I'm a share butter exporter, at this point, and I'm sure with your experience on the ground, you know what the buyers out there want. So let's say, for example, share butter, how should I package it? What do I need to do as an exporter to make sure it's competitive out there and they actually want it to come into their country? Because we know there are a lot of countries out there with very strict rules, when it comes to what comes into their country. What would you say I would need for that?
As a farmer who cultivates shea butter, all you need to do is to get in touch with the export terminals. The export terminals will ask you to bring your cargo in. So in the export terminals, like I said, the agencies are there to do the selections for you. So all you need to do is to load your trucks and bring them forward to the export. You don't need to go straight to the port, because we discourage that. You go straight to the export terminals because the regulatory authorities are there, customs is there to tell you what can go and what cannot go. So you don't need to go straight to the port with your truck. Just come into the export terminals and everything will be done. Payments, whatever you need to pay will be, everything will be, you fill a form and then they tell you all you need to do before your export can go.
Right. And
all exports, not only shea butter. All exports.
Right.
All exports, because that's why it's called an export terminal.
All right. So, definitely we know there's also that huge dependence on imports, at this time. And we know how much, what plays out at the ports, how it impacts, the price of that good, when it comes into the country. And most of the time we talk about, tackling inflation, even though inflation has been on that downward trend, most of 2025 after rebasing, it's still elevated, at this point. And most of the import products, you hear, some of these importers say, oh, it's because of what we have to pay at the ports. That's why we're charging you this amount, for these products that should be cheaper, normally. And what would you say is being done to remove all of those bottlenecks for the imports? Because there's some of these products we have to import, at this point.
Yes, of course.
Yeah.
Now, the thing is this, I must tell you, some of these importers, even when their cargo enter the port, they don't even know. Yes, that's one of the reasons why we have sometimes people talk about congestion. Some of them don't even know that their cargo has arrived. So they leave it there, and then the port, of course, once your cargo is dropped in the port, after a few days, you start to attract demurrage.
But I'm wondering why they wouldn't know. I thought they normally have some kind of alert system, maybe from whoever they're buying from there, and most of the guys that help them clear. Don't they give them that information?
Yeah, yes. Before you import a cargo, if it's a commercial quantity, you must fill a Form M and all that.
Right.
So if you are importing in quantity, of course, those ones will know. But this one container or thereabout, they don't fill Form Ms. So when the cargo arrives, some of them don't even know that this cargo has arrived. But by the time they get to know, maybe it has spent like 2-3 weeks, and then some of them begin to look for money to begin to clear this cargo. This is the actual fact. But before they know it, it has gone up to about a month or so. That's why you see sometimes they abandon some of this cargo. If by the time they find out that it is not even worth clearance, they abandon them and they turn into overtime cargo. So for those who import a lot, like the manufacturers, of course they know, and then the clearance is easy, because the manufacturers have a window. Government has created that incentive for manufacturers. They have a window, and then the customs too also assist, like this Odogu and all that. And of course, the PA is there, pre-assessment report, for those who have done that pre-assessment. Some of these things are easily done by the importers, but some people do not want to do them. So they have all this put together, can lock up their cargo in the port. Because the port, of course, is free to you. You can go into we have a website you can go into, because the Presidential Enabling Business Environment has made it easy that we're all on website. And whatever you want to find, you can find it on our website. Whatever questions you want to ask, you can call in to ask the questions and access the portal, and then begin to do your business as usual. We have made business easy for people to begin to access us, to begin to know how, and way and modalities to go about bringing out your cargo. But the only thing that they need to do is, sometimes when this cargo comes out of the port, they don't want to, because it's 24 hours. We have this 24 hours window for you to assess your cargo, for you to bring your cargo out of the port. But sometimes when the cargo even gets out, they will tell you they don't want to use the road because they don't want to take this cargo out in the night because of safety of the cargo. So that is also a problem.
Right. And, definitely when it comes to the ports, there's so much talk about, revenue, that comes in from the ports. In your opinion, would you say Nigerian ports prioritize revenue generation more than trade facilitation?
No, we do not. We're actually for trade facilitation. Because, like I told you,
is it possible for revenue generation?
The port is a hub.
Right.
For trade facilitation, because trade facilitation encourages growth, industrial growth, and this industrial growth stimulates other areas of the economy, like the IT, like the logistics, the shipping, which of course brings about creation of employment. So our priority, of course, is to do trade liberalization within the world, because it's a global interchange. That's what the port stands for. It's a hub for global liberalization of trade.
Looking at 2025, so far, we've been on this journey of of import substitution. We're trying to get more exports out, at this time. Would you say we've made some kind of improvement, in 2025? Have we seen more going out, finished goods, leaving the country more than the imports?
Yes.
How would you describe it?
Yes. That's like I said earlier, because I was there as port manager. We have had more going out than coming in. Like I said earlier.
Is it because
yes,
the
because
currency got really weak and people found it really expensive to import?
Not necessarily. The government concentrated on export. encouraging export so that we can earn foreign exchange. And so we have created more incentives for people who want to go into export, especially for agricultural products. So we have had more. It has risen from 20 to 80%. And then the import is rather dwindling. So part of why the import is dwindling, like you said, purchasing power is low, but majorly we have that encouragement from government to do more within, and also to encourage local industries. That has been done also. This government has been focused on, trying to liberalize how manufacturers can access, raw materials, how they can expand on, industrialization. It's a focus, for us all to ensure that our foreign exchange shows up.
Right, and
then reduce the import.
Right,
because of course, if you look at it, we can do a lot more here.
Yeah, it'd be great to see more, exports, going out and more finished, goods, not just,
and then semi-processed.
Semi-processed, okay.
Yes.
All right, so definitely we're going into a new year, at this point. For you, do you think Nigeria is ready? Because there's a trade battle, right now. We're seeing different countries, building new alliances. We're seeing some say, don't trade with this one. If you trade with this one, you're my enemy. All of that. We're seeing the tariff wars and all of that. How prepared do you think Nigerian ports are, going into 2026? Do you think the leadership is right to take us to where we want to be, to make our ports more effective?
We are prepared because we are going into automation. And automation is the watchword right now all over. Digitalization and automation. Our tariffs are automated. And then this present government, thanks to the current president who is focused, he has approved the rehabilitation of the ports. So with that, we will have more fundamental projects in the port that, of course, that will attract investors, because one of the causes of problems in the port is decay. And these ports have been built for several years, and then they have not been attended to. But right now, there's going to be a rehabilitation of these old ports. And again, too...
seems everything is old at this point. Even when you look at electricity, you're looking at oil and gas. All the tools we need to make this work, they're old.
So
From what you said so far.
That's why we need to revamp them by rehabilitating them. But talking of in terms of managerial ability, the focus, the will is there. So all we need to do in terms of competing with the world is to take care of these facilities, and then also to ensure that other areas, in terms of going into the hinterlands to get these products like the road, the rail, networks and all that, even the waters, all should be, taken care of.
Fantastic. To get us ready for 2026.
To get us ready for 2026.
Thank you so much. It was great having this conversation with you. Mr. Sylvester Agede is a former port manager at Tinkan Island Port. Thank you so much, sir, for helping us paint the picture of what's playing out in our ports.
Thank you, too. Thank you. I wish you all the best. Have a great day.
Thank you. All right, we'll take a break now. When we come back, we'll find out what's playing out in the global economy. That's in a moment. Just stay with us. right, let's find out what's going on in the global economy. We have John McQuarrie with the details here. I hope she has a gift for me this Christmas. I'm praying.
It's too early, laddie. Christmas is on Thursday, so calm down.
That's why I'm sowing the seed
right now.
Take a chill pill. So that you don't say you forgot.
You can keep reminding me until then.
Should I tell you what I want for Christmas?
know. Then it's not a gift.
Well, I can give you a hint.
I don't want.
I'll give you a hint at some point.
Good morning, everyone. Welcome to the Global News segment of Business Morning. And we're starting with expectations for the week. The first one is already out, talking about the British economy. Today, we're expecting the GDP for the third quarter, final estimates from the Office of the National Statistics. And then also for geopolitics, the markets are monitoring the thin liquidity as the U.S. intensifies the blockade on Venezuela, and that's having a spreading effect globally. It's a situation that's being described by analysts as end game strategy. Tomorrow, it's more GDP. Yes, this one is coming up from after the government shut down the United States. That's the first GDP we'll be having. So it's expected to capture part of the impact of that government shutdown from the United States. Also from the United States tomorrow is the consumer confidence, looking for the December reading to gauge how the holiday season and fiscal uncertainty are impacting sentiment. That'll be on Tuesday. Still on Tuesday, coming from Japan, the GDP cabinet is scheduled to release its annual national accounts detail. That will be from Japan tomorrow also. And then we move over to Christmas Eve. Exciting, yeah? Well, we'll be having a jobless claims from the United States on Wednesday. And most global markets, including the New York Stock Exchange, will have an early close. So the holiday begins from Wednesday, Christmas Eve. And most markets, including the New York and the LSE, will have an early close. I believe even here in Nigeria, we normally close at 12 noon for the markets on Wednesday being Christmas Eve. And then on Christmas Day, of course, as expected, markets are closed. Most parts of the world, but Japan will be expecting industrial outputs. Western markets are closed. Japan will release its preliminary industrial production data late on Thursday, Christmas Day. Business Morning will be here. We'll spend Christmas together. And then Boxing Day is another public holiday. Most countries in the world, the markets will remain closed. U.S. markets, however, will return for regular trading. Trading through liquidity, though liquidity is expected to remain very thin. So activities are expected not to be at full swing. However, it's expected that markets in the U.S. would be open, and most markets, even here in Nigeria, would be closed on Boxing Day. But Business Morning will be here to spend the festivities with you. Now, moving to the stories. One of the expectations for the week is the British economy. We saw the data earlier today. It expanded by 0.1%. That's for the third quarter, according to that Office for National Statistics. The growth figure for July to September period was in line with expectations, and the growth for the ONS also revised down the second quarter growth figure to 0.2% from the previously expected 0.3%. The Bank of England last week projected zero GDP growth for the current quarter, that's the fourth quarter, while estimating that the underlying pace of economic expansion remains at approximately 0.2%. And still in the United Kingdom, British consumers put away less in savings in the third quarter as their incomes were squeezed by a £6 billion rise in taxes. The share of disposable incomes saved by households slipped to 9.5% in the 3 months through September from 10.2% in the second quarter. Real household disposable income per head declined 0.8%. That's a drop driven by increases in taxes on income and wealth, and it means living standards haven't grown since the end of last year. And then leaving the United Kingdom now, we see Italian Competition Authority. They've imposed a fine of about £98.6 million on Apple Incorporated, Apple Distribution International Limited, and Apple Italia for abusing their dominant market position. I beg your pardon, the fine is 98.6 million euro. That's the fine that was imposed by the Italian Competition Authority on Apple. The regulatory body, they're stating that Apple violated Article 102 of the Treaty of Functioning of the European Union in the market for supplying platforms to developers for online distribution of applications to iOS users. According to the authority, Apple maintains absolute dominance in this market through its App Store, which serves as the exclusive platform for app distribution to iOS devices. The fine represents the latest regulatory challenge for the technology giant in Europe, where authorities have increasingly scrutinized the business practices of major tech companies. We go to Asia now, where China has moved to slap provisional tariffs ranging from about 21.9% to 42.7% on select dairy products imported from European Union following the conclusion of an anti-subsidy investigation. The duties are set to take effect tomorrow, December the 23rd. Target items including milk powder, butter from the EU exporters. And Beijing's Commerce Ministry said that the probe found evidence that subsidized EU dairy imports had harmed domestic producers, justifying the trade remedies. The move marks a significant escalation in a broader trade dispute between China and the EU, and it follows earlier actions by Beijing against other European imports and comes amid ongoing tensions sparked by bloc's trade measures, including duties on Chinese electric vehicles. Still staying there, More Threats Technology Company Limited. We know More is a Chinese NVIDIA rival. They have unveiled what they say is an answer to NVIDIA Corporation. They unveiled a new line of graphically processing units. They did that over the weekend, ascending their shares higher on Monday. More Threats rose 2% in Shanghai trade, seeing relatively smaller moves in recent sessions in the stock market that logged wild swings following a bumper initial public offering in early December. More, at its Musa Developer Conference, unveiled its new line of GPUs aimed at servicing both artificial intelligence and video game industries. And then close to them in Japan, the Bank of Japan is expected to continue tightening monetary policy, with forecasts suggesting that the central bank could raise its key interest rate to 1.5% during the Governor Gazu Ude's current term. And a former BOJ board member has said that the BOJ may implement 3 additional rate increases over the next few years, potentially lifting the policy rate to 1.5% by 2028 if economic conditions, including the U.S. growth and domestic inflation trends, support further hikes. And then from there, we go to Malaysia, where consumer price inflation edged up to 1.4% year-on-year in November, according to government data that was released earlier today, reflecting a slight acceleration from October's 1.3% rate. And the consumer price index reached 135.1 points in November, compared with 133.3 points a year earlier, as price increases in sectors such as education, alcoholic beverages, tobacco, and transport, they contributed majorly to the uptick. And despite the rise, the inflation rate came in below market expectations, with economists having forecast a 1.5% increase for the month. And then we go to Russia, where shipments of Russian liquefied natural gas to China surged to record highs in recent months, overtaking Australia as the top supplier after Qatar. This according to data from the customs. Buyers in China have continued to take more Russian LNG despite geopolitical tensions and Western sanctions, and this reflects shifting patterns in global energy trade. According to customs figures, Russian LNG deliveries to China more than doubled compared to what they had last year, reaching around 1.6 million metric tons in November 2025. And that's a level that positioned Russia ahead of Australia in LNG exports to the Chinese markets. And
Thank you so much, Annie. Let's get a check on what's playing out with the market right now. That's the local boss peeping into investing.com. We see the most active trades there. First Holdco, Tantalizers, ICO, Access Holdings. Those are the top trades right now. Big jump last week from First Holdco. Well, that's the show today. Thank you so much for watching. We're bringing more updates at 1:30. I'm Ladi Williams from here, the team right here at Channels HQ. It's bye for now.